All right. Hello, hello, hello. We are a little late on the market open, but we are here. How is everybody? We're going to get right into it. Let me just tweet this out to the world and say that we are live. Live with the markets open. We have the jobs report out today. We are red pretty much in the pre-market. Richard, Cameron, what's up? So that's going to be the big thing we're going over today. No tweet, just go. What's up, Bacon? Let me just put this out there. The jobs report is pretty interesting. Unemployment is now 3.5%. As we can see in the pre-market, here we are. Things are red, not too crazy red, but it's down. Palantir down 2.85%. We've got AMD, which got slashed by 5%, but because they reduced their guidance. However, their guidance is it's the fact that it's only down 5% is actually not that bad of a deal. Chris shared a good picture on Twitter that I'm about to talk about in a second about the labor participation rate. Twitter at 49, Meta down to Meta's at 136, approaching the 52-week low. There's probably going to be a Friday sell-off because, why wouldn't there be? Tesla 234 getting lower as well. We're going to see how the Friday kind of prepares itself. Yo, live morning, dude. Chris says people need to stop chasing their dreams and get to work. Oh, man. AMD getting smoked. Kane, Uriel, my dream is to go to work. Hey, guys, buying more Tesla here. Of course, Joel. What is new? Chris, I want to show that picture that you shared on Twitter because it's actually a really decent picture. Yeah, nothing too different nothing too different from yesterday, really. CRM down about 1.96%. Snowflake down 2.93%. Roku, I haven't checked on this one in a while. $58. This one's a heavy one that's down. Nvidia down 125 from 131. Nvidia's down 4. Nvidia's probably down because AMD is down. AMD got smoked. So Nvidia is a byproduct of that gets smoked. Likely going to see, a bit of a market sell-off. We are about a minute away from the market open. And then we're going to get deep into this jobs report. I want to read into it a lot more and see what it's saying. Unemployment rate falls to 3.5% in September. Payrolls rise by 263,000 as job market stays strong. Now, that's not the best for Jerome, I would imagine, because he wants the job rate to come down. Or he wants the unemployment rate to come up to an extent. But we'll get into it. Okay, so about 20 seconds away from the market open. I expect there to be a bit of a Friday sell-off today. It's been a red week, but granted, it's been a rebound from last week. S&P ended at 357 last week. Now we're at 374, 373. So if we stay above 370, it's been a good week for the market, most likely. All right, here it is. October 7th, 2022, 9:30 a.m. The stock market is officially open. Wake your ass up if you are not up. And let's take a look at the stock market. All right, here we go. Nvidia 125 opening up down 5%. Palantir down 3%. Enphase down 0.91. I did a great live stream last night with Vitaly for anyone who wants to watch it. We went really deep into Enphase. So that was a big stock we talked about and all the things going on with that stock. Twitter 49. Meta 137. Meta selling off pretty decently. Me and Chris had a pretty strong discussion yesterday about the metaverse. And Chris, I think you would appreciate the thing I watched with Vitaly. We had another discussion about the metaverse, and Vitaly's all in on it as well. Now, Meta's still 5% of his portfolio, but he really thinks the metaverse has some gigantic potential, and he thinks that Facebook's the only one really doing anything about it. Oh, wow. Look at the S&P down below 370. Nice little market sell-off, 368. There we are on the S&P. Okay, let's get into the jobs report. United Cows of America. Okay, here we go. Here's the jobs report, September 2022. Let's open this bad boy up. Shout out to 100 people being here. I hope you're having a good morning. We are ending out for the first week of October. Ending it out. Okay, unemployment rate falls to 3.5% in September. Payrolls rise by 263 as job market stays strong. Job growth fell short of expectations in September. The unemployment rate declined despite efforts by the Federal Reserve to slow the economy. Jay Powell wants you to lose your job, and the unemployment rate is actually going down, not up. Non-farm payrolls increased to 263,000 for the month compared to the Dow Jones estimate of 275, which this is like the argument that says we're going to have a soft landing because like we have to get rid of inflation. But if people keep their jobs in the meantime and we still find a way, then it's not going to be as hard of a landing as we thought. The unemployment rate was 3.5% for the forecast of 3.7 as the labor force participation rate edged lower to 62.3%. And the size of the labor force decreased by 57,000. That means 57,000 people, started their own business or did something else. A more encompassing measure that includes discouraged workers and those holding part-time jobs for economic reasons saw an even sharper decline to 6.7% from 7%. Their payroll figure marked a deceleration from the 315,000 gain in August and tied for the lowest monthly increase. So I think that's what Jay Powell wants to see, the lowest monthly increase, if not decrease. We're getting a low monthly increase since April 2021. Liz Ann Saunders, depending on your view of optimism versus pessimism on the economy, there's a little bit of everything for something, a little bit of something for everything in the report. Obviously, the market is not happy, but the market is not happy in general these days. This puts the nail in the coffin for another 75 basis points. This is Jeffrey Roach, chief economist. Wow. He thinks this is going to, if Jay Powell's saying we got to get rid of jobs and we got to get 75 bips to do this, this unemployment rate this jobs report might hypercharge that argument. Fed officials, including Jerome Powell, said they expect the rate hikes to inflict some pain. They say in September indicated that the expected unemployment rate to rise to 4 points. So they want to get employment to 4.4. It's at 3.5 right now, which means 1.3 million jobs would have to be lost. That's what I remember from what he was saying when I streamed it live. Yeah, that explains why the market's down. And then you've got people like Kathy saying, no, this is great. We're going to have deflation, so we need these jobs, so we shouldn't be in this bad situation. DRK, what's up? By 2030, there's going to be 75 million retired baby boomers. 1 in 4 people working right now is a baby boomer. That's true. That is also something that we need to think about. Yeah, it's interesting because if there's for example, take me as an example. I don't have a job because I was able to use the internet to find different ways to, I guess, chase my dream, as cliche as that sounds. But that's not the best for the job market. It's good that I'm not in the market, but because of inflation. But if baby boomers go away and we need more people taking their jobs, and you got people like me trying to chase their dreams, well, you got less people getting jobs, and the problem is that means those wages for those people go up, even if they're jobs that aren't that relatively high paying in the first place. So it is going to be interesting to see. I guess Chris is right. People need to stop chasing their dreams and get to work. But granted, I think as a result of quote unquote me chasing my dreams, that creates new jobs for other people. There's a lot of different ways the economy operates, but it's going to be interesting to see how that kind of plays out. Okay, let's go into here. So here we go. The next 6 to 9 months will be a tell time for the market. This is based on the job report that just came out.
To bend maybe and not break. You think things are bending? You think that something's going to break? It happened, or it had to be dealt with. Didn't happen in the UK. They kind of dealt with it. But do you think there's something under the surface here that could happen, Kevin?
Well, for sure, Joe. I think the next 6 to 9 months are going to be the telltale time period for this market. The Fed is doing every single thing that they can in terms of a tightening policy to bring inflation under control. They also want to balance the jobs market. So today's action is going to be indicative of how the jobs report comes out this morning. But the actions of the Fed aren't going to be seen overnight. It doesn't happen with a snap of a finger. So over the next 6 to 9 months, we're going to be in a very range-bound market. We're going to have to see if these tightening policies have worked, and we're going to have lots of highs and lows along the way. So it's possible that we go lower. The pre-pandemic high was about 33.70 in January of 2020. So that's only about 10% from here. And I could make a case also that maybe Friday was the low. Maybe that was the Joe Kernan Taco Bell low. You know, we're not exactly sure, but has a nice ring to it, huh? This will be a bottoming process. It's not going to be a V-shaped recovery. So we've got a few months to get through it.
Probably won't be, but it's the same low because it's like 1% from the June lows, basically. So we're testing. We tested them, and so far, you tested the lows. It's under 3,600, but I don't think even Katie Stockton would say we violated them, although she certainly thinks we will, and most other people do think. You know, 35.85 is not 3,200, and most people think 3,200 is in the cards. Do you?
Well, let's play a game, can we?
What I don't know. It depends.
I'll keep the math simple.
I don't know you that.
Bro, whenever someone says let's play a game, I think the other person on the other end is like, okay.
Yeah, right. I don't know you that well, but you're far away.
Let's
so
look
go
for
ahead.
next year. So let's say that the earnings consensus is $240 for next year, and we all submit that that's too high. Okay. So give me a number. Where would earnings come down to for next year? We saw AMD and Nike and Dow and FedEx all bringing down their numbers. So let's have you throw out a number.
First, I'd say, did you mean Nike?
Nike, Dow, FedEx, AMD.
Okay, I'm just wondering. That was my first question. I don't know, but then you got to have a multiple, right? And the multiple is what matters. So I don't know. What do you think? So you want to cut 10% off it? What would that be? 16?
Well, it's early to do that kind of math, but let's say 220, even go down to 200. If we put a multiple and we're super conservative, we can make it 14. If we're a little bit more glass half full, we can make it 18. But anywhere in there, you're coming out with an S&P fairly valued somewhere between 3,000 and 4,000. And if we keep it simple, we always try to overcomplicate things. Then we've got a market that can get up to about 4,000. It could go down to 3,000, probably won't. And to your point, if the 3,200 is the maybe that bottom floor, then we're a lot closer to the bottom than the top. I tend to be more in the 3,500 camp, just kind of thinking things through as to how markets can trade and looking, again, forward thinking into 2024 and starting to get a little bit more optimistic because you can see a little light at the end of the tunnel. We've been beaten up really badly. We're closer to a bottom than a top. So I think that the jobs report today, if it comes in weaker than expected, if it comes in at 225 or 250, I think markets will celebrate that as a positive sign. If it comes in hot, and it has the past 3 months, I think markets will sell off today.
Shepard Smith here. Thanks for watching CNBC.
Well, we saw the market definitely sold off because it came in pretty hot. Unemployment rate needed to rise a bit more than 3.5%. 3.7 was what we're looking for. So I think I like what he said also about 35.85 being closer to where we're at and starting to form a bottom, but 3,200 happening, it being in the cards to happen because we jumped so quickly from 35.85. I mean, like literally less than a day, and then we just ran right up. And then we're here, you know? So it's interesting to see how this kind of played out. I'm looking at my portfolio. Everything is red. Like there's a nice big drop on everything. SoFi at 513, Palantir 820, Twitter 48, Meta 137, Pinterest 25, Apple 143, S&P 369, Google 101, Snowflake. Yeah, pretty much everything. Pretty much everything. Let's go to Bloomberg. Let's see what Bloomberg's talking about. Unemployment stuff. The energy stuff in Europe is going to be really interesting to see how it plays out because I still don't think there's a solution to any of this. Facebook is warning about 1 million users about stolen passwords. Well, that's not going to help the stock because, of course, you know, Facebook's freaking Facebook always has some issue going on with people coming down. All right, let's hear about China. There's a currency problem coming to China. I've heard and seen multiple videos about China collapsing. Let's see what's the dealio.
Has been surging in Yuan this year, up about 12% since January 1st. That's helped our next guest, who has a big bet on a weaker yuan. Joining us right now is Crescent Capital founder, CIO, and CEO Kevin Smith. Crescent Capital has $300 million in assets under management. His global macro hedge fund up, we should say, 34% year to date in what has been a tough one. Kevin, nice to see you. Tell us about this bet and how long you think you can keep it on for at this point.
Well, this is a trade we've had on for quite some time. Actually, it really started for us in 2015, and we've been playing it in kind of a Nassim Taleb kind of a strategy with a put option. Looking for a black swan event, and we haven't had that black swan yet, but we have had a pretty steady devaluation of the yuan over these last 8 years, and we've made money on it 5 out of the last 8 years, but we think the real big devaluation, the more serious crisis is still coming.
Serious crisis in China?
Well, a currency crisis. It's really, we think of it as a twin banking and currency crisis. And if you look at the banking assets in China, they have grown 7-fold since the global financial crisis, 7-fold over the last 14 years. And this is really something that's we've never seen this before in any major country for any major currency anywhere on the planet.
So what if you're not buying this? I mean, it sounds like you like gold too, right?
We're big fans of precious metals. At Crescat, we have what we call the macro trade of the century right now, and that is really being long in inflation hedge assets. Gold, of course, qualifies first and foremost. Being short long duration financial assets that are overvalued, and then we want to be actually long the dollar. We want to be short long duration assets. We want to be long gold, but we want to be long gold in the fiat currencies that are the most overvalued on the planet. To us right now, that's that's China.
All right, here we go. Non-farm payrolls.
All right. So we already talked about the jobs report, so we'll get back into that. Let's get back into a little bit of marketing. We see Chris in the chat basically talking about if more people enter the labor market, the cost of goods and services would go down, thus curing inflation. Yeah, basically. I mean, and it's so interesting how that's playing out. Oh man, my boy is calling me right now on FaceTime. I can't pick up his phone call right now. NYC, if you don't pay your rent without eviction process, a year-long food, EBT, get refilled, utilities, don't worry, the city will pay. Yeah, I mean, if you're rich and if you're poor, there's a lot of benefits. Whereas if you are stuck in the middle, there's not that many benefits. I mean, it's a bit hard. If you're rich, everything's good. If you're poor, the government pays. If you're in the middle, you're basically screwed. You're basically screwed. Okay, so Palantir at 819. For those who don't know, Palantir did get a deal yesterday, $85 million. Oh, Jim Cramer tweeted about okay, we got to see. Jim Cramer tweeting about the ETF. I got to see his thoughts on this. Palantir did get an $85 million deal yesterday for 5 years. Comes off another $600 million that they got in September. Let's look at what Jim Cramer is saying about it. I want to see. Okay, here we go. Those will be my only comments about this new exciting new way to promote our money. As always, I welcome people betting against me. I've done this for 42 years. Those who know me know that would have been betting against Apple at 5, Google since inception, Meta at 18, Amazon at 10, Nvidia at 25, and AMD at 5. I welcome all comers. As far as crypto, same. I bought a farm with my Bitcoin winnings all announced, and I bought a boat with Ethereum all announced, everything disclosed. I want you to bet against me. You did not do this for 42 years and lose money every year. Yeah, you could say that, Kramer. But the recent picks have been pretty bad, right? Like, it's not been good. He said Coinbase to 470. Like, I mean, he hates ARK. He loves ARK. I mean, he's in the media, right? So he has to have an opinion on everything. So you're going to have some wrong opinions if you have to have an opinion on everything. So he's definitely incorrect about a bunch of different things, right? But hey, he likes the optimism. He's like, I want you to bet against me. There it is. Well, we know now what Kramer's thoughts are about the inverse ETF. I mean, well, you know, SARK is not doing that well. SARK had $322 million of outflows. That's the short ARK ETF. So I mean, that's not like it's going the best. I don't know how the inverse ETF will go the best. Some Tesla news. So Elon Musk tweeted yesterday that Tesla plans to deliver semis to Pepsi 5 years after unveiling. Hold on, why aren't, hold on, let me sign into Bloomberg real quick. I pay for Bloomberg, so I should be able to get in easily. Boom, 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 boom. So we should get all the content. But basically, they're delivering it to semis, or they're delivering semis to Pepsi, which is really, really, pretty crazy at the end of the day. The fact that they're going to be able to do that. And the other thing that's interesting to me in the context of what they're trying to do is it's going to be 500 miles, which is a pretty decent range for a semi. And they're starting it in December, which is also like, it was just a random announcement that he put up yesterday. Late at night, he just put it up there. Okay, I don't know what's going on with my Bloomberg account, but nonetheless, that's the news. Let me just show Chris says life is better down south. Yeah, that's true. I mean, things are definitely cheaper down south. That's also true. Why are cannabis stocks selling off? Because even if Biden got rid of even if he made it more friendly for cannabis by pardoning people, that doesn't mean that the market's just going to give them a boost. Like, we still have a shitty macro, right? Excited to announce the start of production of Tesla semi-truck with deliveries to Pepsi on December 1st. Also, this is great branding for Pepsi. I mean, if your trucks are running on one of the best brands in the world, which is Tesla, 500-mile range is super fun to drive, then you get a little bit of that brand equity as well. You know, maybe people choose to drink Pepsi instead of Coke. That could be something that's happening. So there's that. What is the market smoking? That's funny. What is the market smoking? Okay, let's see this. Binance CEO breaks down $570 million crypto hack. So I guess Binance was hacked. Hold on, let me look that up real quick. Binance crypto hack. Yeah, $570 million of BNB token was stolen from Binance. So we got the CEO talking more about it.
Saying a cross-chain bridge linking with its BNB chain was targeted, enabling hackers to move tokens off the network. In total, hackers withdrew 2 million tokens, about $570 million at current prices. Joining us now is Changpeng Zhao. He is Binance CEO. The hack comes as Binance launches a new program aimed at training law enforcement and prosecutors to fight against cyber crimes. CZ, it's good to see you. It's what we have seen hacked, and this was what, $500 million, $2 billion total. It's always when crypto is moving from one chain, one blockchain to another. Is that when it happens in a cross-chain bridge? What needs to be done?
Yes, so that is what happens for a cross-chain bridge. And what has to be done, I think, the industry, as an industry, we just got to learn how to learn from this kind of mistakes and make our code more secure. But software code is never bug-free. So, but in the blockchain world, whenever there's a bug, it could result in very large losses. This is one of the cases that happened. But we were able to minimize quite a lot of the damage to less than 100 million now.
I mean, we usually think of the blockchain itself as being almost fortress-like. So, and that's why with confidence you're able to say that everything else is safe in terms of the actual network, the BNB network itself has never been hacked.
Yes, in this case, the BNB blockchain itself has not been hacked. This is the cross-chain bridge that sits between two blockchains that allows users to change from one token to another. As you have said, we have seen many of this type of exploits in the industry this year, last year, but every bridge is a little bit different. So we're still, there are still new exploits that's being found, but the blockchain itself has no problems.
And how often in the course of the business and your BNB, the coin is being used in a lot of different ways now. How often is a cross-chain bridge necessary in the normal course of Binance doing business?
I think it is used almost absolutely every day by people. So people do have the need to convert from one blockchain to another for various reasons. So the cross-chain bridge is an open source smart contract that just sits on the blockchain that facilitates those transactions. So, but once in a while, people do find vulnerabilities. In this case, it happened.
I mean, it's you're fine. BNB has what your market cap must be $45-50 billion in just BNB. So I understand $500 million, but $500 million is $500 million. So this is something that obviously some remedies are called for. Who would provide you with that? Can you do it yourself? The code?
So the software developers, the code is written by a group of software developers for the blockchain, which is what we call the community developers or core developers. The nodes that maintain this network, there's like 26 or 44 nodes depending how what you count, and they need to vote to do the upgrade themselves. So they collectively maintain the network, and when there's a new software version, they will vote for it. And last night, there's a couple of emergency upgrades that was done. And I think over the next couple of days, there will be a few more upgrades to be done. And there's also a few more votes regarding how the hacked funds should be handled will be.
Okay, so basically crypto is a scam and people can steal shit, and like that's the answer. It's like no, I'm just kidding, but like yeah, man, crypto's kind of scary because sometimes some crazy shit will happen in crypto, and it is what it is. Like it is what it is. That's the crypto markets, but can't do anything about it. It's crypto. And the Binance guy has always been big on crypto, but like some bad stuff just happens in crypto and we have to deal with that. Where's Bitcoin? Where's bidders of the coins? Where's Bitcoin? Bitcoin, BTC. 20,000. Are we at that? 19.5. I mean, Bitcoin's held up relatively well in this bear market. We got to a low of 17 and then it bounced back up and it's been pretty good so far. Do we have Ethereum? Wow, it's so red. Ethereum's at 13. Look at the right side of the screen or the left side. So red. Everything. The only green I see is Hexo, which is like a penny stock. It's red on top of red. Let me go to the full thing. Yeah, look at this. Oh my gosh. There's like zero green. Oh my goodness. Everything. If you look at the S&P heat map, it'll probably be just like burning red. It must be red on top. Yeah, look at this. There's a little bit of green, I guess. I don't know if these have updated, but a lot of this stuff is red, man. Red. Wow. It's a bit red. It's a bit red. Twitter and Elon Musk also deal still has some conditions to pass in terms of different financing. So we're going to see how that kind of plays out. But Friday sell-off seems pretty imminent. I mean, it seems like it was kind of bound to happen at this point. All right, let's see here. October could be the month we see downward corporate earnings revisions. Let's see this one.
What are you expecting in today's jobs report?
Well, I know. Good morning. How are you? It's great to be here. I know the Fed wants to see some slack in this labor market. So, it's one of these weird times where, bad news for the economy is sort of good news for the Fed as they're really trying to drain some of the heat out of this market and some of the heat out of inflation.
What do you make of the market action this week? We started the new month higher for 2 days, big moves. Nasdaq seeing gains of 2 to 3% on Monday and Tuesday. Last 2 days, we've been sort of losing steam. Is this just some trepidation ahead of today's report or something else moving markets?
Well, we're lucky at Pitcairn. We serve families that have a very long-term view. And, this is a tricky time because really the only good news is long-term. We see some bounce in this market when you have sentiment get to extremes like it got to last week. You can see a bounce back. But what we don't see is just that big ripping V-shaped recovery that we're so used to over the last 5 and 10 years. We think it's going to take longer this time.
You do say in your notes that October could be the month we start to see downward corporate earnings revisions. Explain where exactly you're expecting to see that.
Well, if you look at July, we're looking at the street's looking for about a 7%-ish year-over-year earnings growth to the market, and we're possibly rolling into a recession. So those things don't meet up that well. And the rally that we had in the middle of July was because the street was really looking for those earnings to come down off the second quarter reports. That didn't happen, but we believe that October will show that weakness, and we'll see some of that coming through this month.
But Rick, couldn't you argue that we're already starting to see those revisions? Just last night, AMD, a major semiconductor company, revising down its third quarter sales outlook. I mean, there are companies that are already saying we cannot meet the expectations that we put out 3 months ago.
Exactly. I think that's the canary in the coal mine. We're going to see more of that this month as earnings expectations sort of line up.
That's basically what's happened with AMD, right? AMD reduced their guidance from like 6.5 billion to 5.7 billion. So this guy's saying in October, we're seeing a downward corporate earnings revision, which might allow the market to finally stabilize
with the rest of economic expectations. And that really doesn't set the foundation for a ripping bull market. I think it's going to be tougher than that.
So would you be selling stocks right now, hold and wait out the volatility? What's the advice to investors watching right now?
It's a really tough year. We're dealing with inflation really for the first time since the 70s. And I think what investors ought to think about is keeping a long term. Now, we don't think the Fed pivots anytime soon, but make no mistake, if the Fed did pivot tomorrow, if Jerome Powell says we've reconsidered and we think we've done enough to tackle inflation in the short term, the market will rip upwards. So I don't think it's a time to take extreme moves. I think it's a time to stick with your plan, make sure that you have a risk profile that fits with your longer term goals, and go through this volatility in a way that doesn't take too much risk against trying to time it day to day because it's just too volatile.
And I didn't hear you mention bonds. I mean,
yeah, if Jerome Powell switched up his approach, the market rip would be insane. Chris says he pays $3.50 now for pizza. Versus I feel that as well. When I get like a slice of pizza or food, like it's a bit more expensive. Have you ever had a chopped? I know what a chopped cheese is, but I never had one. Never had one from New York. Artist here says real number that matters, labor force participation. That's the only way you get productivity to match demand for goods and services. Slamming demand is a mistake, I think. I would agree. Insert cutting the cheese joke. Sounds like crypto needs Palantir. Yeah, man. It is definitely a different thing. All right, last thing we'll see is Jim Cramer talking about jobs report, and then we'll be out for today. There we go.
I want to get down to New York Stock Exchange, get Jim Cramer's take on all of this. What do you think of that number? And maybe more importantly, what do you think the Fed's going to do? And therefore, what their equity is going to do?
Numbers red hot. It's like nothing's happened. I think that Fed Chief Powell's on the right course. I remember I've been saying over and over again to my colleagues here that he wants your portfolio down so that you won't be able to spend as much. He certainly doesn't want more wage increases. He wants more people to come back to the labor force. And it's negative. I mean, what I'm going to say, there's nothing positive here. And, I've read the speech by Waller, and I listened to what everybody said, and there's nothing good here. And it justifies everything that they've done, and they've got to do more. And this is the midday. This is the mid-month sell-off that I expected until the end, when we get to closer to the end of October. And look, it's just not good. I don't have anything positive to say, so I'm not going to make up anything.
But here, I guess the question is, what happens in the end of October? We're going to get more earnings, and if the earnings are positive, right? I mean, here's the great irony. If the earnings are positive, which you sort of want them to be, it's only going to make the Fed do more.
Exactly right.
All right, we're going to end it there. Tesla's at 229. Goodness. So we got Tesla dripping. Let's see if the dip has to be bought on Tesla. All right, guys, I got to go because I got a meeting coming up. Thank you so much, 191 people, for joining the market open. I will be here for the market close, 3:45. Let's see what ends up happening for this Friday. Interview with Jeremy just dropped. You can check on my YouTube channel, link in the description for the platform that it's on, my new startup. You guys can watch it or listen to it, and the video will be out in a couple days. It was a really good interview, so I hope you guys enjoyed it. Last thing, controversial take, allowing inflation to rip. It forces all those savers and meme stock traders to go back into the real world, get a job, and increase productivity. But I think that's too politically destabilizing. Yeah, I think a lot of them have already had to do that if they were betting on AMC or GameStop going to the absolute moon. All right, everybody, I got to be out. Thank you so much for joining. I'll see you at 3:45. A couple more videos coming out today, and let's see where that market ends up going. Happy Friday. Enjoy your Friday and the week. Hope you have a great week and kill it today. All right, everybody. Bye-bye.